I'm Pav. I'm the head of tax here at UK Landlord Tax, and I'm joined by my colleague Abigail, who's the head of personal tax here. So Abby, what are the common expenses that a landlord can claim on their tax return?
That's a question we get asked a lot by our landlord clients. So the most common expenses that you would expect to see are repairs and maintenance within the property. So this may be you're repairing a leak. The most grey area we have with repairs and maintenance is if you're improving the property's value, as this can be classed as a capital expense and would not be allowable within the self-assessment tax return. It would, however, be included later on if you come to sell the property for capital gains tax purposes, but for income tax purposes, it wouldn't be allowable if you're improving the property's value. An example of this would be putting an extension on the property, as it's a structural change and increasing the property's value. Other expenses that you may see within your rental business is insurances, whether this be landlord insurance or buildings insurance. This is fully allowable for income tax in your rental accounts. We also have a common one as mortgage interest. This, from the 17-18 tax year, is not actually allowable as an expense within the rental accounts. It's actually given as a tax relief at 20%. So this actually impacted a lot of landlords, especially if you're a higher rate taxpayer, because you're only getting relief at 20% as opposed to 40%, where the deduction was allowed in the accounts. So that did impact a lot of our clients in terms of the tax relief that they would be getting.
So it seems as though there's a lot of complexities around these sorts of expenses that you can claim.
Definitely. A lot of our landlords think, oh, I've incurred this expense, I can just claim it in my self-assessment tax return, but that's not always the case.
So particularly looking at the repairs and maintenance costs, that seems as though there's quite a lot of a bit of a grey area of HMRC. How is it that you look to identify whether they can be treated as revenue or capital?
Good question. So we always ask our clients what has actually happened within the property. Have you just been repairing a leak? Have you actually gone and put an extension on the property? So we do ask full details of the work that has been involved. We then analyse each invoice that you have.
Seems as though it can be quite complex as to whether some repair costs can be treated as revenue or capital. How is it that you identify as to whether it is revenue or capital?
The main thing that we ask for from our clients is the invoices and description of the work that has been completed. This just enables us to determine the correct treatment of this expense, whether this be capital or whether it be revenue. Typically, a lot of it is revenue because you're just repairing a leak that may have happened, a washing machine failure, a dishwasher failure, all different types of general repairs just to make the rental business keep flowing and keep moving. But if you're then going to put an extension onto a property, or you're building, changing rooms around, extending a kitchen, for example, this is then capital because you are actually improving the property's value and you're not kind of just fixing a repair within the property just to keep up with the maintenance of that.